the intention of the government is to let a common man have more money for their disposable. Now, the thing is, even if you want to shift to a new tax regime, you will still want to have a different another investment strategy in place. You cannot just get away without having any investment strategy, because you need to have a financial portfolio in order to live a life where you can have all your financial goals achieved. So net, how much would be the amount that an individual might just land up saving after entering into a new tax regime and having an investment portfolio? Is it the right way to look at things, or you think having investment instruments attached with a tax benefit made a lot of sense? Because eventually you will land up with the same amount of income, irrespective of the fact that you go through an old tax regime or a new tax regime, because you need to have an investment strategy. You still need to save money.
Yes, Kavita, of course, the new tax regime has got a push in this budget, of course. But I personally think at least the decision of which one to choose, should somebody choose the simple one or the old one itself, that decision itself has to be simple. So let me try and make it simple for the viewer. If your total deductions exceeds 3.77 lakhs across all the heads in the old tax regime, then you are better off staying in old tax regime. So if your deductions are less than that, then you are better off being in the new tax regime. So only one point which needs to be considered, largely making it simple: 3.77 lakhs claims. If you are getting deductions in the ATD, ATC, home loan, HRA, whatever it is, if the summation, let's assume you're getting 5 lakhs of deduction, then you're better off in the old regime. So this is the only decision point which is simple enough for a person, a lay person, to comprehend. Sum total of all his exemptions should exceed 3.77 for him to write to his employer and say, keep me in the old one. Otherwise, the default is okay. Second, very important thing for the really ultra rich, this surcharge reduction is only specific if you choose the new tax regime, which I think is a very, very important fine print. So you have to let go of your HRA and other things if you want to take the surcharge reduction. That's point 2. Point 3, is this the right thing for the government to do? To my mind, 10 on 10. Why? Because what's the point of introducing a new tax regime if you are going to be indecisive and keep fidgeting with the old one? So before the budget, also in several media interactions, also on your channel, I had said that there's no point tweaking the old one and to make it old and in turn obsolete over a period of a decade, maybe. So that's point 3. Point 4, we as a society have come a long way in terms of financial education. 2013 was the landmark year where SEBI emphasized investor education, and this year's mutual fund company's budget is 800 crores for investor education. So will a person be able to decide for himself or herself of what to do with the money without the tax incentive? To my mind, yes. India's weighted average investments of their savings is not earning more than 7-8%. Now, if you have the money and if you're going to invest not on the merit of the tax of the instrument, but for its merit in terms of the personal finance, can the Indians earn 13-15%? The answer is yes. So it's a very good strategy. And I think having faith in the investors of India that they will do a reasonable job with their own monies, I think is sensible. To give you an example, there is 3 crore invested, 3 crore, I repeat, in one of the CRISIL reports, and out of which only 62 lakhs is in insurance policies. The rest of the 2.4 crores is invested without any tax advantage.